Good morning. It's a pleasure to be here. And um, despite this glamorous event, I'm afraid that my topic is unglamorous. But this is a necessity if we want our business to not only create profit but also create value, and if we want our business to exist for a very long time. So books of accounts a strategic asset for business growth and regulatory compliance. If you're someone who wants to start a business, do you have any plans to maintain books of accounts? And if you already have a business, then are you maintaining your books of accounts? And if you are maintaining books of accounts, then do you see it as a compliance burden, or are you utilizing it as a strategic business tool? So why this topic matters? It matters because books of accounts are where you write the story. They are the storybooks of your business. And unfortunately, when you write your books of accounts, it's in numbers, and numbers are concrete. So when you present your profit figures or your net profit figures, you should you should also provide your computation, like how you've arrived at that figure. And if you cannot provide it, then without it, it loses its credibility. So it's not just a legal formality, but it is a tool for decision making. And so it's not just a legal formality, but it is a tool for decision making. So what are books of accounts? They are a record of your assets, your liabilities, and your sales and your purchase, and also your cash book and your bank book. And when I say bank book, I don't mean your bank statement, but where a bank book is where every records of your receipts and payments are allocated to their respective ledgers. So there are certain laws that require you to maintain books of accounts. The Companies Act, suppose if your business entity is registered under the Companies Act, like LLP or a company, then under Section 128, you are required to maintain books of accounts. Then you have your Income Tax Act, but you are also required to maintain books of accounts once you reach a certain threshold level. And then your GST Act. Once you're registered under GST Act, you are required to maintain books of accounts. And regarding that, I also want to add that you feel that at the end of your financial year, you feel that once you've completed all your compliances, you file your income tax return and then your GST returns, you feel that you don't need your books of accounts anymore, but that is not true. You should maintain it for as long as at least the government authorities has the power to assess your tax. Like in GST, it is mandatory that you should maintain at least for 6 years, for 72 months. So next slides, please. So, so why maintaining books of accounts creates credibility? Like during audits and assessments are where the regulatory authorities, they check whether you have properly and faithfully paid your taxes. And also certain government authorities, they have the power to audit your books of accounts too. So, and also if you've ever tried to go to apply a loan, the bank, they usually ask you to provide your income tax return and also your financial statements, your balance sheet. And if you don't have your books of accounts, then it is, since these are all figures, it is not possible to prepare your balance sheets without your books of accounts. And also when you properly maintain your books of accounts, when there is audit and assessments, you can furnish your books of accounts as evidence too, and that brings confidence. Next slide, please. So, but how do we use books of accounts as a strategic tool? So it is beyond regulatory compliance. For decision making and performance review, say for example, as a content creator, you go through your revenue side and you find that 70% of your revenue are earning from maybe a certain client. So you can focus your services on those clients and also make sure that you retain them for a long time. And in cash flow management, for example, if you have excess cash with you, then, and you know that you're not going to need it for a certain amount of time, then you can invest them in short-term investments. And also forecasting and budgeting, it is not possible if you don't have books of accounts. And suppose if in your business, if someone is siphoning off funds, then you can detect it through books of accounts. Next slide, please. The digital shift. So in this day and age, the days of maintaining books of accounts in manual registers are long gone. And it is also a burden to store them for a long period of time. So it is always better to go digital. So there are accounting tools and softwares that you can use, and Tally, Zoho, and QuickBooks. Depending on your business needs, you can choose your accounting tools and software. And these are great because you can also generate real-time reports, and there are certain software like Tally where you can upload your GST returns online. So next slide, please. Common mistakes to avoid. One is, of course, it's mixing personal and business expenses. You should keep your personal account and your business account separate. And also, when you maintain your books of accounts, it is always better to maintain it daily. It's not that at the year end you will start maintaining your books of accounts. It doesn't really work out, and it's a very big burden. So it's better to, when you're maintaining your books of accounts, it is always better to have a disciplined approach. And always review your reports, say quarterly or at an interval of every 6 months, depending on your needs. And also, it is always better to reconcile, like at the end of every 3 months or 6 months, you can obtain confirmation from your debtors and your creditors and see that their balances and your balances are reconciling. From record keeping, it is not just, books of accounts are not just record keeping, but also you use it as a decision making, and they are the foundation to business strategy. And also it is always better to get financial, to literate yourself financially, make yourself aware and of the compliances that is required. Business are a legacy, and in a way that it can, the coming generations can also profit from your legacy. And if you maintain books of accounts, your generations, your successor can also look back and in business there are certain hurdles that you have to overcome. So when they look at it, they can have an idea of how you've overcome the hurdle, and they can also discover patterns, and this can all increase your business. So, thank you so much, and I hope this was worth your time.